Brand new data revealed that home builders are abandoning homes unfinished as investors prepare for a housing market crash. New numbers from the U.S. Census Bureau shocked the investing world on Tuesday morning after it was revealed that the sale of newly built homes collapsed by almost 30% year over year. This massive plunge shows that from the recent peak in August of 2020, new home sales have actually fallen over 43%, putting them back on 2017 levels. The reasons are obvious. Not only have prices reached all-time highs, but interest rates have shot up to nearly 6%, making the average monthly payment unaffordable for the vast majority of the middle class. According to Redfin data, homebuyer mortgage payments surged 44% year over year. You can see by looking at this chart that the average buyer in 2020 was paying around $1,300 a month. Today, that number is well over $2,400. Based on these revelations, many experts are forecasting that the new home market is going to crash in the near future. Their reasoning is simple. There are just too many homes being built right now and not enough buyers. An important metric called housing starts, which tracks the number of homes actively under construction, serves as yet another piece of evidence for this trend. Right now, the reading is at 1.728 million, which is a recent high, approaching the 2007 high of 2.2 million. But the concerning fact is that while this number continues to rise, new home sales are plummeting. So simple logic tells us that building while nobody's buying points to the disaster scenario. This might be the first time in US history where we're seeing such a trend. Economics tells us that when demand is falling but supply is increasing, the result is a price adjustment, aka a crash. Investors are also realizing this, and you can tell by looking at the stock of home builders. D.R. Horton, Lennar, and Pulte Group are the largest home builders in the United States, and one quick look at their stock price tells us everything you need to know. D.R. Horton, as an example, is down 34% from its peak. Then we can also add in the fact that most traffic measures are down as well. Mortgage purchase applications fell to their lowest level since May 2020, and the number of home buyers touring and offering on homes as measured by the Redfin Homebuyer Demand Index posted its largest annual decline since April 2020. Now, listening to all of these stats, you would think that the crash is coming. Plenty of YouTubers, including Reventure Consulting, do a great job digging into these statistics and painting a grim picture. It's not a false one either. The stats are real and concerning. And on top of this, he's not just doing it for the views. He's got his money where his mouth is. Reventure is actively shorting the home builders via put options, and he's making a killing doing so. But what if I told you that stats and the market don't always tell the full story? You see, for the rest of this video, I'm going to give you another angle, one that is often dismissed by emotion, trends, and greed. At the end of the day, do you really care about new home sales, demand, supply, or the stock price of Pulte? Realistically, you should only care about two things. One is the price of homes and if they're going down, and two is the interest rate. Those two factors ultimately decide your next home purchase, and we start with the first. The price of a home. Right now, homes are the most expensive they have ever been, and you may be saying to yourself, well, that just proves my point, and soon there will be a crash. Well, the reality is that according to Redfin stats, 59% of homes sell for over their asking price. That's the highest it's been in recent history, and proves that most houses have multiple bidders competing for each one viciously. In 2019, this number was less than 20%, so it's got a long fall before we see relief. And if you don't believe that number, maybe price drops will convince you. Only 8.3% of homes see a price revision down. That is historically a very low number, and while it's on a slight rise for February, it's got a long way to go before it's even remotely normal. The sad reality is that if you go to buy a home right now, especially an affordable good one, you're going to be competing with a massive line of buyers. But what about that demand question earlier? If new sales are a precursor for what is to come, is demand set to implode? After all, the stock market tends to be the first to know, and if you look at home building stocks, you would think, yes, this is all going downhill. Now, it is true that the stock market has punished some home builders for a supposed downtrend in demand, but if we listen to the CEOs of these companies, they are telling another story. The recent earnings report from D.R. Horton mentions demand 29 times, and there are some shocking quotes in there that go directly against this narrative that the housing market is going to crash. For example, their CEO is questioned about future demand and compares it to the 2008 crash. He says the following: "So I think the downturn in 08, 09, 10, where home values were just decimated, that put a big pause on the desire to own homes." Then he continues with this: "We kind of returned home ownership to the American dream again. It feels like it's a cultural shift or a return to family community, and I think the demand is significantly higher than the homes that can be produced." So there you go. The CEO of the largest home builder in the US is point blank saying that demand is higher than what can be built. To emphasize this point, Bill Wheat, their CFO, goes on to say, our gross profit margin on home sales for the second quarter was 28.9%. The increase in our gross margin from December to March reflects the broad strength of the housing market. The strong demand for homes combined with a limited supply has allowed us to continue to raise prices and maintain a very low level of sales incentives. So we can talk about stats and predictions and things that have happened in the past, but right now on the ground the situation is far from crashing. That's not to say it will sometime in the future, but rather that it's very obvious that purchasing a home today, new or used, is extremely difficult compared to 2019. It may not be fair, it may be a brewing bubble, but there is no stat that shows any type of price falling. In fact, home prices in America rarely ever fall. Since World War II, prices have seemingly only gone up. Only around 4 times in the last 78 years have prices dropped. In 1969, following a mild recession, home prices dropped 12%. In 1990, they fell 8%. In 2000, following the bursting of the tech bubble, a situation where the NASDAQ 100 fell 78%, homes fell only 5%. And finally, in 2007, the worst housing crash in America's history, one that involved a massive stock market collapse on top of bank failures, homes only fell 20%. So if you're expecting to wait for a crash, only to then buy in on 2019 prices, you are betting that the next housing crash will be the worst in America's history. For that to be true, home prices would need to come down 31%, and while that is certainly possible, it's highly unlikely given the history of real estate in this country. That's not to say that some hotspots could see massive drops in the crash because they are localized mega bubbles, but for the vast majority of US citizens, houses are unlikely to fall back to 2019 levels. And if the Fed is any bit serious about battling inflation, interest rates will never reach the lows they reached in 2020. I would love to hear what you guys think in the comments below. Please don't forget to hit that like and subscribe button if you enjoyed it.